The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen, and thank you for being with me for this Danielcode webinar this evening. My name is John Needham. I'll be your host for this webinar. In fact, I'm your host for all of our webinars. and Frank's with us. Wonderful to hear from you, Frank. I hope you're well. I hope you're trading well. And sound and screen are okay, says Frank. We've got some really smart young members, I can tell you. They're on the ball and know plenty. And we seem to have all of our heavyweights here today, or a good lot of them. Mike Kay's over in New Zealand. He's with us today. Adrian, of course, is doing a tutorial at the moment. And I think he's about to embark. Yes, he's doing his paper trading, and his next lesson will be Beyond Masterclass, which I'll talk to you about a bit today as well. Adrian Frank, of course, he's a tutorial guy, as I said. Greg Palladini is with us, and welcome back, Greg. Hope you're well. Jeff's with us. John is with us, a newcomer, John H. Good to have you with us. John, I think you were with us years and years ago, as I remember. Yeah. Justin's with us from the beautiful Hunter Valley, which I think is probably not so beautiful at the moment. That's in New South Wales, and which is the middle state below Queensland. And they are having a terrible, terrible time. There's been absolute disastrous flooding around that central north coast, and it's moving down further south. So I guess it'll be not far from you, Justin. So be safe, and I hope everyone who's affected, we're thinking of you. Dreadful thing. We've had people dying. Damage will be extraordinary, and it's just gone on and on. And the amount of rainfall, the amount of water that's accumulated, I mean, it's staggering. We're talking about all-time flood level highs. At Taree, the highest flood level ever in history. Extraordinary stuff. Jeff's with us. Grand to have you with us, Jeff, of course. Justin, as I said, Hunter Valley, I hope your feet are dry, Justin. Mark L., who's wouldn't ever be a party without Mark, as we say. He's a wonderful stalwart of ours. And Sean down in Adelaide. Lots of more people coming in a bit later now. Good to see you all, folks. Yeah, I hope you're all happy and well and have your ears pinned back for what I'm about to talk to you about today. And have a look at this. Here we are. So, you know, markets are orderly, rational, sometimes predictable. But we have rules, and the Danielcode rules are what you need to keep yourself safe. And we're pretty close to an inflection point, folks, which we'll deal with not too long in the future. And you're going to need to be able to trade, and you should learn now the opportunities for trading in the foreseeable future are absolutely extraordinary. I think that there's a chance of some real turmoil in markets. And of course, we love turmoil in markets. We love chaos in markets because, as you've seen over the years, some of you have been with us for a very, very long time. The more drama that's happening, the more accurate the Danielcode becomes. If, of course, that's possible. It's incredibly accurate all of the time. But I'm just hanging out for those big bars. And I love it. A bit of chaos is a trader's friend, certainly a futures trader's friend, not the other sorts of traders. So this is from the front page. There are these 4 videos there. Video one comes from Mark L., who's with us today. Videos 3 and 4 come from Justin, who's also with us today. And each of these is about 25, maybe 35 minutes. And I do really suggest that you have a look at them. Pick one, and if that whets your appetite, go on and see the others. There's an enormous amount of knowledge there that's being imparted by Danielcode members, which is quite sensational. So let's see what we've got. So I've framed today's webinar as a critique of what goes on in this wonderful, great trading world of ours. And I've pinned it around Morningstar's details that for the 2024 fiscal year, the 20 best hedge funds, or the 20 best funds of one sort or another in the world, looking everywhere and trading everything, was 8.6% profit for a year. And that was a year with staggering volatility in equities, in bonds, in many of the commodities, quite extraordinary. 8.6%, the average of the 20 best funds in the world, with average fees a bit more than 30%. So you can knock that off the top. Well, you can pretty well get that as a risk-free return with bonds. To me, it's appalling. And that's why it's so imperative that you actually learn to trade yourself, because there are people I know in the industry who are very, very good traders, but they keep it to themselves. There is nothing as good as the Danielcode that's out there or ever been seen, but I share it with you. So this is your opportunity. And there's a reason that for most traders that their trading is really mediocre, but it's only mediocre in terms of expectations. I can remember a guru, small g, in this business. He's been around for a long time. He's been an absolute leading member of the teaching fraternity in trading futures for decades, many decades. And I can remember at one of his tutorials, seminars, I think he called them. This is Larry, for those of you who have been with the Danielcode for a while. The marketing is so fantastic. It really is. He's actually a journalist by profession, and terrific marketer. And the marketing's so good that you're really strongly tempted to go there, and I did several times, I can tell you. And then he starts off his presentation and says, blah, 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 blah. Oh, that would be a ridiculous rate of return, so don't even think about that. And he came back to about 10.5% per annum. That's not what futures trading's about if you know what you're doing. You've seen on those webinars I suggested you have a look at. They're the paper trading or back testing results that our members have got. Cut that in half if you like. It's not real money. It's always much easier to trade when there's no real money involved, because you get rid of all the flight and fight emotions. And if that's your expectation, around 10%, you're wasting your time. Go and work for a bank. If you want to be a futures trader, you should be thinking of much, much, much higher expectations than that. So as I say, go through those 4 webinars that are on the homepage and see what our members have had to say about their back testing once they learn most of the Danielcode. Of course, Mark L., who's a wonderful supporter of ours and the author of that video number 1. Hello, Sarah, down in Melbourne. Nice to see you here. Hope you're well. We don't have many ladies at the Danielcode, so when we find 1 or 2, it's important to welcome them, especially. We should have a lot more lady members. Take those, as I say, Mark L. I offered to teach him Beyond Masterclass, which is becoming more and more important, folks, as you'll see today. And Mark's response, he won't mind me sharing this with you. He's a very straightforward bloke. He's an engineer. All engineers are straightforward blokes, aren't they, mate? And he said, no. He said, I'm not really that interested, because you've already given me the perfect system. with trading Danielcode time, creating and trading Danielcode time signals. And Mark was one of our earliest clients, members of Danielcode, who learned how to create and trade time signals. And his take on that was, you've already created and taught me the perfect system. I'm not interested in anything else. I've got everything I've ever dreamt of, and I'm thrilled. So that's fine. Looking at the rest of the trading universe, and any of you individual traders as well, you're not going to be able to create the sort of returns that we talk about because you don't have the tools. And the reality is we all think that we're terribly individualistic and single-minded in our pursuit of things and have unique ways of looking at the world. The reality is we don't. We're actually herd animals. And of course, that's why advertising works so well. There is a group think about almost anything you can think about. And it's the same with trading. The big firms who dominate the industry have their views of things. Some of them might have superior knowledge. They certainly don't share any of that with you because the major firms, don't forget, they're the guys who are advising the top 40, the top 20 funds that I've just been talking about. Every one of those funds is absolute top of the tree people with virtually unlimited resources for advice, for computer capacity, for employing really, really clever people, and having the best of everything. And that includes that every single one of them is being advised by one of the big boys. So my comments about the mediocrity of the trading of most, other than Danielcode guys, applies to them as well. But you can't get there without the tools, and that's the problem. And the tools that work are the Danielcode tools. The tools that create signals prematurely, that is before they're required, often 1 or 2 days before, are the Danielcode tools. For almost everyone else, whatever you're using, it's a lagging indicator. Almost all known studies and indicators, apart from the Danielcode, are lagging indicators. So you're always missing that sell at the top. You're always missing the buy at the bottom. Whereas with Danielcode, that's what it's based on. That's what it's built on. Danielcode is all about turns. And if you can get all the market turns right, you're guaranteed to make a huge amount of money. So let's think about what are these essential Danielcode trading tools. First is the Danielcode proprietary trading channels. Now, I don't talk about them enough. I do teach them as part of the tutorials, but I don't talk about them enough because they're fabulous. And I've got a few examples to show you today. And some of it is absolutely astonishing. The current low in US T-bonds comes from one of the long-term Danielcode trade channels, which ended, we haven't moved it, since, I'm going to say, November 2016. That was the last bar that had any effect on the proprietary Danielcode trading channel. Yet from that date, we've got today's low in the bonds. We've got every other high and low in the bonds. It's quite extraordinary. And I'm going to show you that. And with everything I tell you, I tend not to tell you things that I think I know unless I can prove it to you. I'm an attorney by profession. I practiced the law for many, many years. And that's my background. That's how I was trained. I was trained that if it's not provable, it's not real. And that's a trial lawyer's mantra. It doesn't matter what you think. It's what you know, and more importantly, it's what you can prove. That's the essence of our rule of law, which is what makes us civilized communities as opposed to the others. So The Danielcode proprietary trading channels are magic. As I say, I don't stress them enough to you. I'm going to show you some more of them today. You can learn this stuff with the Danielcode tutorial if you're doing the one-on-one tutorial with me, or if you're looking at the Danielcode video series, which is so popular now. It's lesson number 3. It's quite extraordinary. You'll see it today. So that's one of the tools. All of this stuff is our proprietary Danielcode stuff. I've developed all of this myself. And the rest of the world can have access to it if they want, but they don't want. They want to go on knocking themselves to death with Elliott wave theory and a few other ideas that work well enough when they work, which is now and again. Adrian, hi mate. Good to have you with us, of course. Yes. So the proprietary trading channels very important. Proprietary price targets. Now, there's a little bit of a trick to these that it sounds contradictory. I can assure you it isn't. But the Danielcode price targets are actually created from the original Danielcode time series. And quite simply what we do is we take the Danielcode time cycles and we convert them to price. How do we do that? Well, very sophisticated and requires someone very, very clever to do that, which that's very much tongue-in-cheek, folks, because I'm not that clever. What I did all those 20-some odd years ago or more, I simply took the time cycles and said, what happens if we call them price cycles and we just change them from being vertical levels to horizontal levels? And it was perfect. It was that simple. That's where all of the Danielcode price cycles come from, the original 15 lines of our source code. And it's amazing because every one of those Danielcode price targets has an element of price and also an element of time, because that's what they are. They're the Danielcode time cycles expressed as price. So markets know those numbers. They love those numbers. And what we ask is that we want to get at any of those numbers, we want to get what we call target recognition, which basically means we want the bar to find that number at its high, if it's rallying, at its low, if it's correcting, or on the close. And we want that to be in a pretty tight level. What it is 1.5, 0.1%, not 1%, 1/10 of 1% of the price at the present time. So it varies. It's got a whole lot bigger, a lot of this stuff, as these markets are in historically high levels. Interesting enough, they haven't got any looser. They're still running to the levels that we had in, back in about 2013, 2014, when I was proving all this stuff up. So absolutely imperative stuff, and you'll see quite amazing. Our trend indicators, terribly important to you. There, as I say, are in lesson 3 of the Danielcode video series. And we have 3 proprietary methods of determining trend. And trend is important because if you're doing it right, it will affect what stop loss you use. In other words, we have a number of different stop loss techniques. And depending on whether we think we're with the trend or against the trend, we'll use a different stop loss protocol. So that's important. The next on the list is creating and trading our proprietary time signals. Well, go and have a look at those videos I've showed you on the front page, folks. That's what it's all about. And to the best of my knowledge, creating and trading Danielcode time signals is the safest and most profitable trading I have ever seen or ever heard of. It's that simple, and I've been saying that for a long time. No one's corrected me on it yet. So, very vital. And once you've mastered that, and you do need to master that, you can go on to our new subject, Beyond Masterclass. It is becoming more important every day. I'm more and more focused on it every day because I'm seeing amazing results out of it. It tells you, amongst other things, when are the best trading opportunities. It tells you when the consolidations are starting. And consolidations just kill your P&L. If you can avoid 50% of those consolidations, your P&L goes up dramatically. And most of all, it shows you how to catch and trade the big swooping trend moves. That's where the money is. And in fact, we've now got a number of traders, a small number. Everything we do is small numbers because we're a very private business. We don't advertise. You have to find us, which is not easy for everyone. But we've got a small number of traders now who are saying to me, I'm only trading the masterclass trend signals when we've got a extending trend set up. In other words, they're sitting through those dreadful go nowhere bars, and all of which cause you frustration, loses money, and makes you age prematurely, I can assure you. And as I say, we've got a number of now saying we're only trading the breakouts into the extensions, extended moves. And some of the charts I'll show you today are quite extraordinary about how that works. So they're the basic tools. They're all Danielcode tools. They're all proprietary. I've invented all of them. And if you don't have those tools, you're never going to be an above mediocre trader. Just not going to. You don't have the tools. And when you think of the tools that are available, I mean, there are studies that you've never even thought about, let alone heard of. Some of this stuff gets very, very sophisticated to get beyond belief because there are a whole lot of younger people who are computer savvy, and their whole business, their whole life is creating new studies. Extraordinary, isn't it? Because everything we've got comes from a very simple tool that's actually probably even a bit better than the computer. It's called the Mark I Human Eyeball. If you can look at charts long enough, you'll see it. You'll find it. I did. That's how I found everything. Okay, let's keep moving along. That's the important part. So these trading channels, we're going to be talking a lot about bonds today, specifically UST bonds, because bonds are actually the market disciplinarian. When the market starts to have symptoms that are unpleasant, the bonds will react. And when bonds react, that's pretty much the known world because the holders of particularly treasuries, notes and bonds, that's Japan, that's China, of course that's America, that's all over the world, it's the UK, it's everywhere. And bonds are a disciplinarian by virtue of the fact that when the bond market starts getting beyond a normal trading range of acceptability, it can be savage. And we're actually at that point now, pretty much exactly at that point now. And the little pull down we had a few weeks ago all came from a little spike up in bonds that got the interest rates on the 10-year notes up to up above 4.5, and it sent the mortgage rate up to 7+ in the US. So the many interest rates are actually based on the 10-year UST note rate. So it's vital. The 30-year bonds are the big gorilla, probably one of the biggest single markets in the world. And it's enterprised internationally because the foreign countries, China, Japan are the standouts. They've got so much, they hold so much treasuries. So these Danielcode trading channels I'm going to show you have proprietary settings equal to our special non-standard deviation. If you're just using standard deviation for your channels, folks, you're failing. You're never going to go anywhere. Markets don't work on standard deviation. What markets work on is a synodic month, and you can express that time cycle as a fraction in various ways. But nobody argues about the significance and importance of bonds. They're absolutely vital, and we've been in a halcyon period of bonds until not so long ago, a couple of years ago, I guess, we were pretty near zero bond rate. Uh, Good, mate. Mike Kay, great mate of mine. He did a live tutorial with me in New Zealand back in about 2011 or thereabouts, and he's just done a Danielcode video tutorial to learn to create and trade time signals, and he's just written here. Some of you can see it. I think you've given the game away, mate. I think I now know what you mean by time and price are the same thing on different axes. I think something just clicked. Mike, I hope it has, mate. That would be absolutely wonderful. And that's the purpose. That's the purpose of it all. So when bonds get to that stage that they're unhappy, equity markets will start to correct. So you should be always aware of what these critical levels are for US bonds, notes, etc. And they've changed. They're different. I'll show you historically where the big panic in bonds was back in the days when Paul Volcker was the governor of the Fed. And they were so worried about inflation, and it was so persistent that he raised interest rates to 12%. And a few weeks later, might have only been 7 to 10 days, a long time ago, he raised interest rates to 22%. That's how dangerous a problem in the bond market can be. And we're very close to that level now, as I'm going to show you. A lot closer than anyone realizes. And for those who are informed, you'll know that Jamie Dimon and a number of the very, very good big traders have been saying you're too complacent. The equities market is far too complacent. You need to be much more aware of what's the problem. Well, have a look at this. Now, most of you have seen this several times, many times. I show this to you periodically. This is my long-term US T-bonds chart. And in this particular chart, this is our 24-day chart. In other words, every single bar you can see is created of 24 trading days. And on the left of the chart, you can see I've put a big blue ellipse there to show you the big gap down that happened in July, probably June, was it, 2099. And that's when Paul Volcker was the governor of the Fed, and interest rates were, and inflation, I should say, was so sticky, which is a feature of inflation. It gets sticky. It can get very sticky, and it had. And they just couldn't sort of jolt things out. Inflation was such a problem. So on that date there, you see that big gap. He raised interest rates to 12%. And a few days later, maybe a week or more, he raised it to 22%. And of course, the equities market just swooned. Bye-bye, fell over, flopsy. And it's going to seem strange if I tell you this, but that's pretty much exactly where we are today. You won't believe it, but I'll show you. That's exactly where we are at today. And have a look at this chart. Look at the obvious stuff, the high in March 2020. We picked that high, traded it, told all our clients what to do, including Greg, the other Greg. He's also a wealth fund manager, a very good trader. And his companies were holding a lot of bonds at those days because the advisors always say you've got to have some bonds. You've got to have a balanced portfolio. A balanced portfolio means you've got to have bonds. Well, that whole sell down is what caused a whole lot of panic. And that's where a few of the more entrepreneurial banks went bust and had to be bailed out because this chart is expressed as price. And the yield is the opposite of price. So at those highs in March 2020, they were the all-time highs in T-bonds, or in other words, the all-time low in interest rates. And since then, for the last 4 or 5 years, they have been trending down pretty savagely. And recently, there's been a bit of a floor put under it. You can see back in July, maybe June 2023 was the low there. It found support there. It's bounced a little bit. Look where it is today. That dotted red line, you can see it sitting almost exactly on it. And that is actually 6 Danielcode deviations from the mean. You can see that red line running along the middle of the chart, pretty much left to right on the angle. That's the mean. And that we stopped moving that in November 2016. You believe that? That's the last time I touched it, the last time it's been moved. It's just been sitting there. A lot of you have seen this. Many people have seen this. So from that date in November 2016, are you ready for that? That's forecast today's low and every other low. So you want to know about T-bonds? Long-term charts, Danielcode trading channel. It's proprietary. You put your levels on, your chart will look nothing like this. If you're using the Danielcode trading channel, it will look exactly like this. Very few people have access to it. And of the people who have already had access to it, I don't think we use it enough. Have a look at this. This is a closer look at that same chart. These Danielcode deviations from the mean, they're expressed usually as standard deviations. These are not standard deviations. These are Danielcode deviations. They were created in November 2016, so I've shown you. Look at those dotted lines, dotted red lines running diagonally across your page. They're extensions of the original Danielcode trading channel, which, as I've said, ended, or I stopped moving it at least, in November 2016. Here's today's low, right on that line. Just a thing was taken a bit earlier. It's actually even more accurate than you're looking at there. Everyone, look at the arrows along the running down there. March 2021, target recognition. April 2022, breakout of that range. September 2022, target recognition at the low. October 2023, the low. Okay, a premature low there. That low did not find the support level from the lateral lines. It has now. Okay, have a look at this. This is UST bonds. This is UST bonds with a quiet little look at Beyond Masterclass. You can see we had a sell signal right at the high, and today's low has actually created a buy signal. And the first bar out from that high was a Beyond Masterclass setup bar number 1. That is valid, and it's exciting, and it's telling you stuff. What's even better is when you get confirmation of it, which you get 2 bars later, and I put on there Beyond Masterclass number 2. Once you have that, remember, if you're trading time, you'll be already short from the high. So you short for 2 days until you get the confirmation. You get the first signal the day you get short, or the day set up to get short, is the first bar that's a Beyond Masterclass bar. The second bar, the confirmation, comes 2 days later. What that means is you can move your stops away. When you do the Masterclass course, I'll show you where to put your stops. We never have a trade without stops. You've got stops. It's just that we're giving the market a bit more room to move. Look what happened. Look what it goes down, 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 down. $4,600 into today's close. You get all of that with Beyond Masterclass. You see that? And what do we think about this for accuracy? Look at the notes I've got down the bottom there. On the bar, which is finds that blue line, and it has next to it a note, low is 110.24. That's the blue line, 110.24, 0 variance. And you knew about that. It's been on the members chart for yonks. In fact, it's been on the members chart since the high. Look at that next level down there. A couple in between, I've taken them off to make it clearer for you. That low was exactly 110 caret 01. That little arrowhead you see is probably called a caret. That low is 110.01. Look at your blue lines, 110.0. 1 tick variance. Is it possible? Of course it's possible. We do it all the time. This happens to us every single day. You're not guessing. You're not approximating. Don't waste my time talking to me about old highs and old lows and support and resistance and Fibonacci. That's a lot of rubbish. They're all approximates. This is not approximate. This is the real thing. This is where it all comes from. This is the DNA of markets, is the Danielcode. In fact, I've shown some of you at various stages. I've said to you, markets are talking to us. Markets are trying to tell us what they're doing, and they're doing that every day. The problem was, until we had Danielcode, we didn't understand, we didn't have the language to understand what markets were saying to us. Now we do. And that's exactly what this market's been saying. It's gone down. It's just been tripping off all those Danielcode levels. And what it's saying is, I know these levels and I'm following them. I know these levels and I'm following them. And you can expect to get that comment from the markets once every 2 or 3 days. If it goes longer than 3 days without a comment, it's saying something else to you. And what the market is saying to you is, not these ratios, try a different ratio. Yeah? And these numbers are really important. And they take me a heck of a long time. I do all this stuff by hand. I do it personally. And there's over 40,000 charts that I've created for members since the website went public in 2007. And they're all on the website. How many of you have checked them out? How many of you really take these numbers and write them down on your charts and look to see what happens? I'd suggest very few, which is a shame because they're dynamite. This is the 6-day chart of UST bonds. Have a look at this. The blue line level at 111 correct 15 has been on this chart since about April since about April. Yeah, have a look where this market closed. It runs down, it runs through a few of the blue lines, then it turns around and it closes. 111.15 was our number. There's one tick variance on that 6-day chart. And it's incredible. Every one of the bars on the 6-day chart is made out of 6 individual trading days. How can it be so accurate? It should be less accurate than the dailies, but it's not. It's just as accurate. It's extraordinary. For any of you who are interested in seeing the potential for where these markets are likely to go and the extent of them, you get these. We do these 6-day charts for the folks who are subscribed to the Danielcode website Super package, and we do crude oil, S&P, UST bonds, and gold, and they're updated twice a week, and they're uncanny. You can see the previous low, 2-tick variance from a line that's been on there for a long time. The previous high, 2-tick variance from the blue line number at 122 correct 7. Been on the chart for, since the January low, in fact. That's what creates the high. The lows create the high, the highs create the lows, using Danielcode ratios. Okay. Here it is. Be afraid, be very afraid. Why? Have a look here. Put your eye right over the left where I've got the blue ellipse. There's a line running through there, which is the start of that gap. And that gap was caused when Paul Volcker, then the US Fed governor, raised the Fed interest rates to 12%, then 22%. Look at the gap down. Ugh, dreadful stuff, wasn't it? Well, have a look where we are now. I've sent you a little blue arrow to that line I'm talking about across the chart saying we are here. We are exactly at the level that the bond market was at back in 1999 before Volcker gave it such a serious dose of medicine. That certainly cured it. But look where we are. We're there now. That's the price level we're at today. Not going to take much to tip this thing down a little bit further. Scary stuff. You should be scared. If you know how to trade Danielcode time cycles, you're not scared, you're laughing, you're saying, bring it on. The quicker it comes, the sooner that we get more volatility. More chaos equals volatility for us. Love all that. Okay, love it. Okay, let's keep going. Here we are. This is another view of the Danielcode trade channel. This is on a daily bar. This is, in fact, the S&P. And I've had a lot of people saying, oh, you know, what's happening with the S&P? It's just wandering around. It's had one decent bar in the last 2 weeks, and then just wandering around aimlessly. No, it's not. It's not wandering around aimlessly. What it's doing is it's tracking the Danielcode trading channel. So forget the little red bar. That's an inside bar. That doesn't count. Every other bar, the close and indeed the low, is almost all inside the Danielcode trading channel. And that held the market. We got the correction up from near those highs there. That correction came on, I think it was just the 1 day down pretty much, wasn't it? May 2019. There's the correction. Okay. Wonderful stuff. Wonderful stuff. You knew about it because it had a sell signal on it. It had TO3 and a blue line sell signal on it. And those signals are valid for 3 days, including the day of posting. The very next day, the market went up a touch higher. Where did it go to? 5992.75. That's the Danielcode level. Where did that little wonderful key reversal bar go? 5993.50. 3 ticks difference. Okay, have you got it? I mean, at a number like 5,900, this is the S&P. So there are 4 ticks in every point, are there not? It's 23,600 possible ticks. This market found that high with a variance of 3 ticks. That's all. Just 3. Just 3. At that number, the 0.1% that we allow is 5.9 points, which is 21, 22 ticks. It did it within 3 ticks, and it does that all the time. What about the day before? What about the outside bar? The close of that bar was 5982.50. 5982.50. Look at the blue line. 5982.25. 1 tick variance. Do you know this stuff? Are you seeing this stuff in your trading, folks? Because if you're not, you should join the Danielcode. We do this every day. There's nothing strange about this. I talk to you about this all the time. Every time I do a webinar for you, which is twice a month, basically, I show you our trading for the last few days. They'll show you the charts. They'll show you the levels on them. Go back and look at some of our earlier webinars. There's over 100 of them on the Danielcode channel at YouTube. Over 100. Go and look at them. More importantly, it's what I'm going to show you very soon. Look at these members' charts and absolutely take them to your heart. They are the key to everything. Hey, Gig, glad to have you here. Oh, gosh, Gig's come in here. Yeah, here he is. I'll talk to you in a moment. That's wonderful. Okay. Yeah. More detail from Tuesday. This is what actually happened at the top. We had a TO3 and blue line sell signal that was created by the bar on May the 16th. The high of that bar was 59.77.50. Sorry, I'm on the wrong one. It skipped one. The next bar we're interested in, that bar's there, that's right. It's the next bar, it's the big outside bar, key reversal up. The high of that bar is 59.87.50 and 59.82, sorry, 59.87.50. The close is 59.82.50. Remember, these signals are valid on the bar, high, low, or the close. 59.82.50. There's the blue line, 59.82.25. 1 tick variance. Come to our next bar. We're now up to May the 20th. This was Tuesday of this week. The high of that bar is 59.93.50. What are we looking at there? They're supporting the blue line is at 59.92.75. 3 ticks variance. Amazing, isn't it? Happens all the time, doesn't it? What about today? The close of today was 58.56.75. Okay, there's your first blue line, 58.58.50. And I think there's probably something interesting about the low on our red lines. You'll see those as you go. So that's how that sell signal developed. It hasn't gone far. There's still a huge bullish bias in this market. And this was done before today's trading, of course. A huge bullish bias in this market. So these proprietary price targets, this is from Wednesday members chart. This is UST bonds. This is what was published on Wednesday night. And you can see there that bar was sitting pretty much on the red line at 110, I think 24. Yeah, 110.24, and there was the blue line, 110.24. 0 variance, just sitting there. Now, that was Wednesday night. Look at this. What happens on the next day? What happened today? Here we are. Here's the close. And the low of today's bar, where would that market turn? The low is 110.01. Look at the blue line. Just keep going down. You'll see one that says there 110.0. It's the 2 down from where it was on Wednesday. Exactly. Not somewhere else, not wandering around. Exactly at its Danielcode target. Variance, 1 tick. Strange? Not really. Happens all the time. This is the sort of stuff you need to be a superior trader. Have a look at this. Markets turn at and only at the Danielcode numbers. You heard me saying that? If you've been with us for a while, old Mo Pravosti, who was a wonderful, entertaining guy, wonderful man, and I haven't heard from him for years, and I'm not even sure that he's still with us. But he was he worked for Wells Fargo down in New Orleans, and he was really into the markets. Wonderful guy, and he always, whenever he'd see me, John Needham says markets turn at and only at the Danielcode numbers. He was a funny guy. We had a lot of fun with him. Some of you have met him who've done the tutorial in the States with me. So why do I think these numbers are so flash? I've been doing these charts since, well, I've been doing them since about 2000. You've been seeing them on the Danielcode website since 2007, when the website first went public. And there's a link, which I'm going to show you, which says members charts. So that statement, markets turn at and only at the Danielcode numbers. I've got about 40,000 members charts that prove that point, going all the way back to 2007. They're posted, they're on the website, they're automatically loaded 30 days after they come off the live members charts page. And you can see them, and you can prove that what I've said. And you can scroll your way through all of those markets on futures, on Forex, and you will be flat out to find a market that has ever turned ever anywhere except at its Danielcode number. And if that statement is not sending shivers through your spine, I don't know what will. If you know where these markets are going to turn with a high degree of certainty, you may not know which one of the numbers it is, but you're going to know when it happens. Very, very few people can say they know anything about that at all. And the only ones that do are getting the Danielcode members charts. Are you subscribed to the Danielcode members charts? You religiously grab them and put them on your charts every day? You should be. It's important stuff. It's vital stuff. It's the key to everything. Here's this website. Look down on that bottom line there where it says TO3 pending, TO3 plus pending, trade program. Above that it says members docs. Left to the left of those members, that will be the present member documents, the current member documents. To the left of that's a link that says Chart Archives. You can click on that. Be really patient. It's going to take a long time for them all to load. You'll see them loading, and Terry's organised them all by year. And you'll see every chart that I've created since 2007. And every one of them will work exactly the same. As I say, you'll be flat out trying to find a market that's ever turned anywhere except at a Danielcode number, which we post for you twice a week, more often if necessary, sometimes every day when we get some volatility. These are our Danielcode time signals. Really simple, really clever, a bit like the wheel. Once you know how, once you see it working, you're going to say, oh, that's easy. And then you're going to say, why didn't I know this before? Look at this. Every single turn is happening at a Danielcode time cycle. Extraordinary stuff, isn't it? Look at the rundown we've had in bonds, just this last rundown. Look how it's been controlled by the Danielcode trading channel. Look what happens. It starts running off from the time signal, down, 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 starts hitting that blue line. That holds it up. The next day it breaks it, but closes above it. The next day it rallies. It goes to the upper blue line. Exactly. What happens the next day? It opens a tad above the blue line, rushes down to the median. What happens the next day? Wanders about inside the Danielcode trading channel. And the next day. And the next day down. It stops right at that lower blue line. What about the next day? It stops exactly at that, just outside that lower blue line with its close, rallying back up. What does that do? Next day, you get a key reversal bar up. Where does it go to? It gets selected. It bursts through that line. The market then says, oops, sorry, didn't mean to do that. I'll give you a key reversal bar down again. Where does it close? It's trying desperately to close right at the median, the thicker blue line, and it does. What about the next day? It's low. It's right at the low value of this channel. It runs up and closes almost exactly on the channel. What happens with the next day? So repeat, rinse and repeat. Opens above the red line. That scares the hell out of it. Runs down to the safety of the median, the thicker one, by which time it's got red dots on it because we're now seeing an extension, just an extension. I've stopped moving the blue line. And it runs down. It just breaks through the bottom of that channel. It's on the 12-day blue line, highest high, lowest low 12. Says, oops, sorry, does a reversal, gives you a key reversal bar today. Amazing stuff. Look where today's bar closed, right at the extension of the median. There is nothing random about this, folks. This happens all the time, every day. You should do it. Gig says he does it religiously. I'm going to read out his thread to you in a moment. And he says, I do it religiously. Well, so you should. It's pretty amazing stuff. Okay, what were we at there and what are we about to do? Did I miss one here? I hope I didn't. Yeah, this is what Beyond Masterclass is about. You avoid the minor counter trends with Beyond Masterclass. This is a Beyond Masterclass chart. Here's your sell signal at the top. This is still bonds. Beyond Masterclass, number one signal, number two signal. That's telling you move your stop away. I'll tell you if you take the course exactly where to put your stop. And let it move. Give it a bit of space. This is going to run. And it does. And there you've got one trade straight down. You're not caught up in the counter trends. You're still short. You sit through those pretty happily. And you make $4,600. And markets are doing this, locking themselves into the Beyond Masterclass signals. Markets are doing it all the time. There are about 14 markets at the moment that are in a Beyond Masterclass phase. That is, they're extending. It's a high volatility move, and you're going to get a whole lot of money out of it. It's quite brilliant. As I say, it's becoming more and more important to us every day. Okay, here we are. Better move on a bit. This is, I think, our final chart on Beyond Masterclass. This is the dollar yen, folks, and you can see Sarah will like this. Sarah thinks that she's hooked onto the yen. She has a brain reaction to the yen very well. Have a look. All that pink shading I've shown you is where you are in a Beyond Masterclass trade. This thing is like it's permanently in a Beyond Masterclass trend. Pretty nearly, isn't it? I mean, it's amazing stuff. There's a fortune in that. And that's, about a year of trading sitting there looking at you. And there are a lot more. All markets do this. The futures are doing it. The Forex is doing it. If you take the currency futures, they're doing it exactly the same. In fact, you can take the Forex signals from Danielcode and you can execute them in the currency futures contracts. Trade this stuff in the future. Don't want to be involved with Forex? Good. Do it all on the futures contract. Extraordinary stuff. Okay, this is what we did today. This was crude oil. We were long into that 64.18 high, and that stopped us because that was pretty aggressive. How would you have known about it? It's a pretty odd number, isn't it? Well, it was one of our blue line numbers is sitting there at 64.18, and the high was just about there. This is the US dollar index. We haven't been following this. We haven't been actually doing it on our website for a while. But as you can see, it's just fighting to hold those levels. It's pretty normal stuff, nothing to get excited about. But what's interesting, if you go to the long-term version of it, this is our long-term chart. Every bar on this chart is 24 trading days. You can see between the high of 2001 and the low of 2008, this is now sitting at a little bit better than mid-levels. So the dollar's not underpriced at the moment. The market's never wrong. The market tells you where the price is, I should say, but it's holding support at a fairly strong level, and it's been doing that pretty consistently since 2022. You can see that red line there. There's a couple of them, 98, 97, a low one at 98.12. It's just been holding support at that level all the time. Important to spend a bit of time thinking about the US dollar because the US economy really requires a much, much cheaper dollar, a weak dollar. I don't think that's going to happen, but someday when we have time, and we don't today, we need to move along, we can have a talk about currencies and what their costs will are. This was today's S&P trade. We were short. I've talked about that long enough. This is gold. We've been long up till today. We're now short. The 6S signal was right at the line there, the blue line. This is natural gas. It got a huge bust up. Straight up with the had target recognition at the low. That's what set up the TO3 buy signal, and that was the rollover. And it's just gone whoosho, hasn't it? Up, steadied down a bit yesterday. Found the Danielcode red line at 3.845, and gave itself a little bit of a rest. Here's the Nasdaq. This is incredibly bullish. It's just holding on. It's fighting like a mad dog, isn't it? There's a contrast, according to Goldman. They believe that this is all this buying is CTA buying, and the hedges are shorting the Nasdaq heavily. Well, if they are, I can't see it. It seems to be holding support pretty well as far as I can see, and it's been a great story. This is the Russell. I've been saying to you for a long time, if you want to trade equities, trade the Russell. It's more exact. It gives us the best signals. You can see here that high right at the blue line, 2139.6. TO3 sell signal, we're on it. Down it comes. First day down, that would be Monday. The low, 2046.8. Where's the blue line? 2046.35. Tick variance. That's all. That's not even a human hair. Nothing. What about the next day? What about today? The low is 2027.1. Look at the next blue line. On the left, 20270. One tick variance. Does it all the time, every day. If you want to trade equities, trade the Russell's, my suggestion. Here's silver. I had a TO3 sell signal. It dived down, looked promising for a while, then it found support and pretty much closed where we entered. Here's wheat. Has had a nice run up. and it had a TO3 sell signal and a time sell signal on the high. So we've had that nice run up for $1,200, and we're short today, and the trend is up. So this is a counter trend. Here is this is your Beyond Masterclass. I've shown you this somewhere else. You've seen the accuracy of this. I've talked to you to death about this. Precision and accuracy, no guessing is what happens in UST bonds. So teach yourself to trade our new video series, folks. The various degrees, the first, second, third, fourth, fifth, and sixth degrees are various nomination. Price is the first degree, time is the second degree, volume is the third degree. We don't use it anymore because the dark pools are so split. And I see that the CFTC came out with an announcement yesterday. They're going to make dark pools available to approved traders. In other words, spread the damage a bit further, guys. Absolute nonsense. But that's the way the market works. The regulators get captured, don't they? And the fourth degree is an angle. Fifth degree is a different angle. Sixth degree, that's your Beyond Momentum bars from Beyond Masterclass. Very, very interesting stuff. Okay, target recognition we've talked about before. This actually comes from the previous webinar. Just want to reinforce the accuracy of these price levels. This is way back in 2015. This market, this is gold, one of the most volatile of all of the markets, just ticking off its Danielcode numbers at the highs. Next sheet screen shows you at the lows, and there it goes. It's just great. Put the time cycles on there to show you some of that magic, which is pretty great. And the memory the market has to have, because we're not telling it anything except the ratios. It has to know the high and the low price exactly, so it can calculate apply the ratio to that high and low, and create the Danielcode retracement, all of which is quite extraordinary. Okay, so you've read this. This is from last week, a week before. Our Teach Yourself to Trade video course. It's going extremely well. People are enjoying it. They're doing well out of it. We've got people who are progressing on there to their real-life trading and doing well. It seems terribly complicated, but so many different markets, so many platforms, what have you, and endless commentary everywhere. The Learn to Trade will show a complete trading program with specific entries, exits, and protective stops. And next week, I'm going to talk to you early in the week about a new product that's been developed by one of our wonderfully supportive clients. And what it is he calls it Danielcode Helper. And it will create the orders for you. At the first level that you buy and you sell. What happens if you get an outside bar? Does it know about gaps, true highs, true lows? All that sort of stuff is going to just be a little short program that's going to create this stuff for you. And Terry, I hope, is going to knock it to death on the weekend, and I'm hopeful we'll have this to offer to you next week. It's pretty wonderful. So it will help a lot of people find that difficult. You've seen this chart before. This is the TTT lesson number 5. This is your Beyond Masterclass, Adrian. The bars that don't have a pink on them don't have any Beyond Masterclass momentum bars, MOM bars, if you like. What happens when there's no momentum bar? The market consolidates. Difficult to see it. Some of you will say, oh, well, that's not a consolidation. It's moving at an angle. Yes, it is, but you can have a consolidation at an angle. And it's showing you both a sideways consolidation at the left, a downward consolidation towards the center, and an upward consolidation to the right. And the character of that consolidation is you won't find, very hard to find, very few of closing highs or lows that offer you a profitable exit. And that's what consolidations do. They just beat you to death. Okay, this is the masterclass tutorial. You should know about this. I show it to you every 2 weeks if you are really serious about your trading. I will be happy to teach you everything that's worth knowing, and you can do that as a one-on-one with me, or you can do it as a teach yourself from our TTT video series, which is about less than half the cost, incidentally, which has been an important point. That's why we've had people have had access to it. And this Beyond Masterclass, as I've said, it's getting more and more important every day. It's huge, and I've got a couple of techniques to it, which I can talk to you about at another time, and it just puts the cherry on your P&L because you get these whacking great moves. If you know which markets to look for and you know the signals, they're pretty much continuous, and there's a lot of them. I'm surprised, but they're there, and that's just on the markets that we cover at present, and there are lots of other markets. Once you understand it, it will work on any market at all. This is Frank DB on the fourth seal for this week, and pretty accurate, isn't it? He says, we have an active 29 cycle top running until the 22nd, another chance to halt this amazing rally and some sort of a correction. We were talking about this on Monday. However, we still expect new all-time highs, and we're almost at the black line now. Important to pay attention. You can sign up for this Frank's commentary. He does S&P gold and crude oil, whichever ones you're interested in, or all of them if you wish. Just go to our services page and click the subscribe, the PayPal button. Get yourself subscribed to Frank's commentary. It's pretty exciting stuff. And I'm showing it to you after the fact at the end of the week or the end of the fortnight. You really need to know this as soon as it comes out on the Monday. We had a fairly stilted trading in our Forex this week. But this was a pretty nice one. There was a TO3 buy signal in GBP USD, which is called cable, and for some reason, and it was a nice little subdued momentum trade up. Forex is winding up a bit. It's trying to sort itself what it wants to do. This is a dollar CAD, Canadian dollar. This is called the loonie, the US dollar Canadian pair. It had a correlated TO3 sell signal there, which gave you a bit of a burst down, found support at the 13813 level, rallied back, might continue to give us a little bit of downside in the future. Nice trade that's there. Folks, if you haven't already, please help yourself to a free trial and just go to the website, www.thedanielcode.com, to start your free trial. Just hit the register button. If you have any issues, and if you've already had a free trial sometime, the computer will remember you and won't want to give you another free trial because it's a meanie. It's a nasty little guy. But contact Terry at support. His details are there on the website. He'll be happy to assist you. Finally, this is our disclaimer. It's very easy to lose your money trading futures and Forex if you don't know what you're doing. In the same way, it's very easy to kill yourself in a motor car if you don't know how to drive. So it seems obvious, but do take it to heart. Don't risk real money until you are confident that you are a safe and competent trader. And the best way to become a safe and competent trader is to do a training course with the Danielcode. So, thank you for bearing with me today. I was just going to go back and touch with what Gig was talking about. He said many people hear and see the price follows the Danielcode numbers, say the blue lines. Yeah. This is his question, when you have many of them and starts ticking them off, how do you know which one to trade in the counter trend? Just like this TO3 bond chart. Really simple. If you've got a signal there, Danielcode signals all have three qualities. First of all, they attach to a bar in particular. Each of these signals has a time that's valid for between 1 and 3 days, including the day of posting. And every signal has an entry point, and every signal has its initial stop loss, all of which is published on the website. So that's the final kicker. We think we have a signal. We think we have the market's at a stage where, for whatever tools we're using, we think this market is ripe for a turn. That's not to get us into the market. We're a bit more conservative than that. What that does is we're saying we believe this market is ready for a turn. If the market agrees with us, it has to show us. And it has to show us gig by turning and going to that specific number, which is published on the website. Okay? And that's what makes the difference. And at the same time, you will know if you take any trade at the Danielcode where the initial protective stop goes. And that is also the failure point. And if that failure point is taken out within 3 trading days, it's telling you that you're wrong. And if you're wrong, you need to do something about it. And what you need to do is flip your trade. If you were long, you need to go to short. If you were short, you need to get long. That's why that tool is called Flip Me. Okay, so that's all there. Here we are. Right. Da, 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 da. What have I missed? Here we are. Frank, unlimited respect for all of this stuff. He loves it. He did a tutorial. He's a very smart young man. Well, thank you for being with me, folks. We're a bit over time. We've had a very important session today, and I hope you've enjoyed it and taken it all to heart. The more you look at this stuff, the more amazing it is. I was talking to one of our new clients, Jorn, who lives in Iceland, and he's a network engineer, just done his Danielcode tutorial. And we were looking through some charts together and talking about the trading with it, and we started laughing. A lot of you guys have come in after I started, guys. Sorry to have not welcomed you. I know you're with us, Bob, and also Akshay has appeared. Well, so did a lot of people. So did good. So did Chip. Anyway, good to have you here. Let's move on. What I'm trying to say to you. We literally started laughing about amazing things. We were talking about time cycles, and I was saying to him, look, it's going to be one of these, this one, or the one before. And we're moving these time cycles back, and all of a sudden, bang, there's the high, the absolute high at the time, perfect to the day. And it's so amazing. You just fall over yourself. I laugh about it all. It's so brilliant and wonderful. Anyway, that's me for today, folks. It's a Friday afternoon here, a Friday morning here, at 11:45, and I do hope you have a wonderful weekend, and I do hope you'll join us at our next webinar. And here we are. Gig says, "Oh, amazing how many people want to listen to you." Thank you, Gig. I hope they do. And Jeff, wonderful to see you, my friend. Again, you. Great style, which you've been with us a very long time. Enjoy your weekend, folks. Be safe. It's a long weekend, isn't it? It's a U.S. federal holiday on Monday, I think. And enjoy your weekend especially. Thank you for being with me, and it's bye-bye for now.